What's up, everybody? Welcome to an episode of Hot Stocks. I know you have all been waiting for an episode on Tesla, so I figured why not do Tesla and NIO in the same video. I'll see you all after the intro. Hot Stocks is going to be a new video series right here on the Stocks channel. This video series is going to bring the hottest stocks to you weekly, and it's going to help you make better informed decisions on trading and investing in these hot stocks that are going around the stock market. So today we're going to cover Tesla and NIO, and we're going to do Tesla first. Alright, first up we're going to need to do some quick education because I want you all to be able to understand the analysis I'm going to do on Tesla and NIO today. So the analysis is called Elliott wave theory, and it shows us that the stock market moves in waves and cycles, and those waves and cycles go with the investor psychology, and it allows us to predict what the stock market might do in the future. So the basis of Elliott wave theory is that the market goes up in 5 waves. So we get that first impulsive move, that first correction wave to end wave 2, and then that third move is another impulsive move to the bullish direction. Then we get one more correction wave for wave 4, and then the final wave is wave 5, which finishes out the bull cycle. And then we go into what's called the bear cycle, where we go down in 3 waves called the ABC correction. So we go up in 5 waves, and then we go down in 3 waves, and then each of these larger waves subdivides into smaller waves. So within wave 1, we have a smaller wave 1, 2, 3, 4, 5, and then wave 2, we have a small ABC, and then wave 3 again, we go up in 1, 2, 3, 4, 5, and again wave 4 down ABC, and then wave 5 again, 1, 2, 3, 4, 5. Now, they don't always have to happen just like this, but this is the investor psychology that allows the stock market to move in these waves, and we can use this in our analysis to see where Tesla and NIO are at in this cycle. So now that you know the stock market goes up in a 5-wave cycle for a bull cycle and down in a 3-wave cycle for the bear cycle, let's take a quick look at some of the psychology behind those moves. Alright, so this chart does a great job explaining the psychology of the Elliott wave moves. And the first thing you need to know about wave 1 is there's no actual investor sentiment at this time. The market's just moving up and nobody's really paying attention or knows why. The people that got in down here are considered the smart money, and they knew something about a stock that nobody else knew about, and they bought at the absolute bottom. After wave 1 completes, we get a correction and there's nothing really going on. Nobody's really aware of this stock and no one's really talking about it yet. And then all of a sudden, after wave 2 completes, we start heading up in wave 3. And we start to break above where wave 1 ended, and we start getting some optimism and greed in the market, and more people are catching on and they're learning about this stock. After wave 3 completes, we start getting a pullback and the bulls get content and they stop buying, and we complete wave 4. At this point, everybody's aware of this stock and they've seen it run up in wave 1 and wave 3, and now they want to get on board for wave 5. So as wave 5 begins, we start to get euphoria and extreme optimism, and we see the price go up to the highest it's ever been, and everybody is now talking about this stock. So when wave 5 completes, everybody's still buying in at the top, and everybody wants in this stock because they think it's going to go up forever. And as we know, that is absolutely not true, and everybody that bought at the top of wave 5 bought at the absolute top, and they're ready for the bear market to start. So everybody that bought at wave 5 starts to have regret during the A move of the correction, and they start regretting buying in because now they're down big on their investment that they just bought. As wave B starts, they start getting desperation, saying this is it, we're going back up to where we came from, but that's absolutely not the case. And then we start heading down again to finish wave C, and this is where all the denial and panic happens with the bulls, where they now have severe regrets buying in at the top of wave 5, and they're now down huge on their investment. Usually around this time, they will capitulate and they will sell everything they own because they're probably down 30 to 50% on their investment, and that's just in time for this cycle to repeat. And then we start going back up in 5 waves yet again, forming all new highs and an all new 5-wave cycle. So that's the psychology behind what we're going to be doing. I needed this education to start you out so you understand what we're going to be analyzing today on Tesla and NIO. Alright, so let's jump into Tesla and try to figure out where we're at in this cycle and how high we can see Tesla going before we enter that ABC pullback. So you can see I have my Elliott wave numbers here, and we did finish wave 1 back here in February of 2020. Now this was back when Tesla was starting to show some fundamentals. They were starting to pump out more cars, and they were starting to meet their numbers and opening up new gigafactories. So we can say wave 1 is by far when all of the smart money was in Tesla, and they knew Tesla was likely to meet these milestones and that the stock was going to be worth more in the future. So we had all of our smart investors buying in, and we got all the way up to the top right around that 183 price target, which was before the split. So this was actually 5 times, just in time to go back into an ABC correction to finish out wave 2. So remember, wave 2 is a correction wave to the bull market, And it means that it's just a slowdown before we continue higher yet again, because we're not yet at the end of the cycle. So sure enough, at the bottom of wave 2, we started back into another bull cycle. And you can see how wave 3 looks like it subdivides here into 5 waves to complete the high in wave 3. Now, the one thing I want you to know about wave 3 for Tesla stock is it was absolutely built on hype. Remember back going into the Tesla stock from the lows of March to the highs of August is Tesla did announce that they were going to do a stock split. Now remember, a stock split does not fundamentally add any value to a stock. It's completely hype and it's complete euphoria and optimism that drove Tesla to the higher prices to finish out wave 3. That is not a sustainable fundamental reason for a stock to go higher. So there is a lot of hype from Tesla stock from here all the way up to here. And a lot of this move was attributed to a stock split announcement. So obviously that hype and that euphoria eventually runs out, and we start from the end of wave 3 into a long drawn out wave 4 where we entered this flat correction. Now we didn't talk about flat corrections in the educational part of the video, but not all corrections come down in an ABC. Sometimes we get into these consolidation flat corrections where we sort of bounce around and we wedge in and the stock price builds up energy before its next breakout. As we know, coming out of wave 3 going into wave 4 is we still have upside left in this market because we're following Elliott wave analysis, and we know that wave 5 is the end of a cycle. So of course, busting out of this consolidation in this wave 4, we did start into wave 5. Now there is one more concern about wave 5 is a lot of this bust out of the wave 4 consolidation was attributed to Tesla joining the S&P 500. So again, that doesn't add a lot of fundamental value to the company, but it is bullish news for the stock price because now the S&P 500 index funds have to start buying loads of Tesla to add into the index. So Tesla did start into wave 5 in November, and you could attribute a lot of this move here from the S&P 500 news. So again, you have to ask yourself, is this move sustainable, or is there about to be a huge sell-off in Tesla stock once the S&P 500 inclusion is over and all of these index funds have already bought into Tesla? So let's go ahead and look at where Tesla could go in the future. And if you're a buyer or an investor or even a trader of Tesla, this should help you make a decision on whether or not you're going to hold Tesla or sell it in the short term. Now remember, if you're a long-term investor, usually you're better off just doing nothing and hold the stock for 10 to 20 years, and you're going to come out way ahead anyway. So don't worry about day-to-day moves if that's where you fall in Tesla stock investments. Now, if you're more short-term in Tesla and you're trying to maximize your profits, you might want to pay attention to what I'm going to start talking about. So remember, to end wave 5, we will go into that long-term ABC correction, and it will look something like this, where we could come down significantly on Tesla price, and it could be over the course of many months. So using Elliott wave analysis and Fibonacci extension levels, I do have price targets on Tesla that I think we could start to see some strong resistance levels. Now the one level I had, which is going to be a very strong resistance level for Tesla, is this 1.618 Fibonacci extension level, which is a price target of $587. Now, the one interesting thing about the price action on Friday is you can see at one point we were trading above 587 and we failed to close above 587, which shows that that level is going to be a very strong resistance. At one point on Friday, we were trading somewhere around $600 and we gave back 13 points to close down right around 587. So the question we have to ask is 587 going to be the top on Tesla in the short term? Or are we going to extend past 587 and come up here to about 647? So the first thing I want you to pay attention to on the hot stock of Tesla is watch this 587 level. If we start getting price action and we start closing above 587, the next price target you're going to start watching is 647. If we start getting above 587, it's highly likely we're going to get to 647. But the point I'm trying to make is if we don't get above 587, you might want to consider taking some profits and buy back in at a lower price much later. If we start getting a pullback off 587, remember the market moves in corrective ABC moves. So we would get a bounce to a lower high and we wouldn't actually see 587 again. We would stop somewhere short of 587. And in this example, let's just say it's a lower high somewhere around 575, which is a complete random number I just drew in. And we would see a rejection and a failure for Tesla to form a higher high. And if we start back down again, that's going to tell us that 587 was the top and we're going into that short-term bear cycle on Tesla. Now, the other possibility is that we continue higher to 647 and we see a very similar thing happen just at higher prices where we fail to break above 647, we get a pullback and we fail to form a higher high, and then we start back down. That will also tell us that the bear cycle is coming, but we will not get there until we get up to 647. So the number one thing to watch is if we break above 587 or not, And then after we start pulling back off of one of these price targets, watch to see if we bounce and form a higher high or not. If we fail to form a higher high, the market is likely done going higher. Wave 5 on Tesla will be ending, and we're going to start going into that ABC correction. So the next thing I want you to know is if we do start going into an ABC correction, we're likely going to pull back to a Fibonacci retracement level of this 5-wave cycle. So if we get up to 587 and that's the top, the prices I want you to watch for possible pullback areas are this $465 level and this $383 level. Now it's likely we could go as low as a 0.618 Fibonacci retracement, which is all the way down here at 250, but I'm not going to say that a hot stock like Tesla is likely going to see retracement down that low. So more realistically, I want you watching this price target at 465, which is very close to our support level right here around 461. If we start breaking below 461, then the next target I want you watching is this $383 level. So remember, the bear cycle heads down in an ABC fashion. So it is possible we come down here to the 461 level, we bounce and it looks like we're going to start heading higher. We fail to form a higher high and we start heading down lower. And then the C wave could end at the 383 level, and that could be the end of the bear cycle. Now this could take you out all the way to the middle of next year. It could be a long-term bear market for Tesla. And again, we don't know why this bear market's going to happen, but Elliott wave analysis is very good at predicting these cycles. And the news is usually the culprit and it gets blamed for the moves, but really it's just time for Tesla stock to cool off because we had a huge run after the stock split news and a huge run after the S&P 500 news. It could just be time for Tesla to cool off and start heading lower. Don't forget there's also a lot of EV hype right now, and we're seeing EV stocks across the board going parabolic. So the EV hype and the S&P 500 news is absolutely contributing to Tesla's 5-wave move here, and it could extend us past 587 to 647. So if we do get to 647, the price targets are a little bit different, and I want you watching 502 and $413 as possible pullbacks if we get up to $647. Now $600 and $650 are nice round numbers, so it's likely we could overshoot 587 and get to 600, or we could overshoot 647 and get to 650, but those are generally going to be the targets. So anywhere within those areas, I want you to be paying very close attention to what the price action does. Now Tesla is a hot stock, so you will likely continue to see Tesla in the hot stock series, and we will cover it in more detail as we get more updates and more price action to analyze. So next up, I want to jump over to NIO stock, and we're going to do a very similar analysis on NIO. And we also know that NIO has very similar EV hype, which is going on across the board in the stock market right now. So we all know that NIO came from being a penny stock to now being worth over $54 on the stock market. So anybody that bought NIO at $2 is up huge right now. So all the smart money piled into NIO when it was around $2, and we saw the end of cycle wave 1 right around that $15 level. We did get that nice consolidation pullback to finish wave 2, and now we're in this extended parabolic wave 3. Now wave 3 looks like it could have ended at our 3.272 Fibonacci extension level of $57, because ever since we hit $57, we got that sharp pullback, and now the stock price is starting to cool off and sort of hang around at lower prices. So if we did finish wave 3, our next possibility is that we're gonna start seeing a correction in NIO to go into wave 4. Now wave 4 on NIO could coincide with the correction wave at the end of wave 5 on Tesla. So maybe some of this correction and some of this cool off is about to come across the EV stocks, and we're about to see some of the hype start dying down on the EV stocks, and we're going to start seeing some cooling down. Again, the analysis doesn't try to predict the news, it just simply follows the price action and follows the wave structure, and we can see that wave 5 on Tesla is ending about the same time that wave 3 on NIO could be ending. So on NIO, we could have seen the top at 57, and it's likely that we're heading down somewhere between $46 and $39. There's also a pretty strong support level on NIO at $41. So anywhere between $39 and $46 could be good opportunities to start adding NIO, because as you know with the Elliott wave analysis that we've done, there is going to be a wave 5 on NIO. So possible price targets of wave 5 on NIO I have here from anywhere between $60 and $69. So you could go ahead and just round 69 up to 70, and I think we could see price targets on NIO in the very near future somewhere around $70. However, I want you all to be fully aware that it's likely we see a pretty significant pullback, and we're going to start scaring and shaking out some of these NIO bulls by getting down to price targets of 39. That's going to scare a lot of people that were buying at 54. So be patient on NIO. If it were me and I was bullish, I would just wait for the wave 4 possibility and wait for buying at lower prices. However, like I said on Tesla, if you're a long-term bull on NIO and you're just going to hold it for 10 or 20 years, if you buy at 54, you're still going to be profitable when it hits 70. However, I'm a trader and I don't like buying and holding stocks for a long period of time. I get in and out and I look for opportunities to maximize my profits, and then I move on to the next stock. So somebody like me who's a trader is going to wait for the bottom of wave 4, and when I start seeing confirmation that wave 4 is ending, I'm a buyer until wave 5 completes. So anywhere between 60 and 70 is my price target on NIO. And again, NIO is a hot stock, so it could exceed any of these prices. And if we start blasting through 57, you can see that we could extend up to $62 or $67 before wave 3 ends. That will limit how far wave 4 pulls back, and that will also extend how far wave 5 goes. So if we see NIO start extending past our wave 3 and going even higher, obviously I will update our hot stocks analysis on NIO and I will let you know what my new price targets are. But right now I see a possibility that NIO maxed out at 57 to end wave 3, and we're likely going to get a pullback somewhere between $39 and $46. I would be a buyer at those levels in the 40s, and I would be a holder until we get to at least $60. If we get to 60 and we blast right through it, why not hold longer and wait to see if we can see 64 or 69 or maybe even higher? So there we have it, everybody. That's my hot stocks episode on Tesla and NIO, and I hope you all enjoyed this look at these two stocks. Hot Stocks is going to be a brand new video series right here on the Stocks channel. So if this Hot Stocks video series interests you, let me know in the comments below and smash that like button on this video so I know to make more videos just like this one. Also, feel free to let me know other hot stocks that you want analyzed, and I will add them to the video series and you will see them in the next episode. If you're new around here and you like this kind of stock market technical analysis, feel free to smash that subscribe button so you can follow along with all of my updates. Thanks for watching, everybody. Thank you for joining me on this brand new video series. And as always, I will see you in the next episode.